one of the topics that came up was one of the people one of the members in the mastermind. They brought up they have a rental portfolio, they have all that, and they're kind of looking at what their next step in life is, right? What does that next thing look like? They want to be very passive. They want to do all this, and it brought up a very interesting question for me because it's something that I've always been thinking about. You reach financial freedom, right? What is financial freedom? By the definition is that, pretty much that you're at a point where you no longer have to work and your cash flow, your investments, whatever.
Your assets outweigh your liabilities.
And it takes care of any liabilities that you have, rich dad, poor dad, one-on-one. What does that look like, though, moving forward? You hit financial freedom. What does the next decade or 2 or 3 or 4, whenever you hit financial freedom, what does that look like? Because that, like, one thing that I brought up to them was that, yeah, you have right now, you've hit financial freedom. But there's going to be a point that those properties that you have, that cash flow, that income, is going to kind of hit a point of, like, diminishing returns, right? A house gets much older, starts deteriorating. It starts getting to a point where it's like, man, it's not really producing anymore. So now you're kind of like pulled off the bench again, having to reassess your investments and modify your investments and maybe sell off some and have to jump into something else to keep that level of financial freedom. So that was one of the curiosities that I wanted to kind of talk to you about is like, what do you look at that? Like, you hit financial freedom. How do you make sure that that financial freedom stays over the coming decades? You understand? Like, what do you feel is the adequate thing? Because they can't go completely passive, right? Because then at some point, they're going to have to do something with that real estate. And if they've been out of the market for years, it's going to be, I think, much harder to do. So, like, what are your thoughts?
Well, I mean, I guess it depends on the person too, to where it's like real estate is not a passive. I mean, it can be fairly passive, but it's not like it's as passive as just putting it all in the market, stock market, diversified, or handing it over to a financial planner. It's like, hey, just manage this. I just want to draw from it, kind of like a retirement account is. To where I don't know. It depends on each person. Well, no, it's just like what it's like. I'm trying to think of like a general way to look at it. It's like it's whatever's comfortable to that person.
Right.
And you made the comment of like, I don't know what all your exact question is too, a little bit of like, what does financial look like for me or what does it look like for other people?
Well, okay, let's put them, their situation, right? They have enough cash flow right now that they could essentially both retire and live the life that they want.
Yeah.
And they're good to go.
Yeah.
For how long?
Essentially indefinitely.
Why? You don't think that real estate is ever going to need to be turned over, do something else with?
Really?
Really?
I mean, you take care of it. I mean, you made that comment. Like, if they're out of the market for a while and they come back and they don't know what to do, it's like, they're the skills that got them here. Those are lifelong skills. They don't just go away. Yeah, the market changes, but it's also, you still already own the house. You still are generating cash flow. And knowing those two is like, they're not going to run out to where like, oh my God, I can't repair my houses. I need to sell them all. Like, I don't think it's ever going to get to that point either. So I think it goes back to where several people, like, you got to have a better place to put the cash. Mm-hmm. Where it's like, oh, I could sell this thing, but I don't even understand this market anymore. I can't find deals anymore. I'm just going to repair what I got and keep it.
Yeah.
And just repair it and just keep the train going. So like, and then you could equity pay down, really talk about like, do I pay some assets off? Do I leverage up? It all depends on where you want to be, to where it's like, they could stop and they could start doing the waterfall effect, where it's like, we got an extra 20 grand a year, 30 grand a year. I'm going to dump that into one property, pay it off, increase the cash flow, pay the next one off, increase the cash flow, and move down the chain to where they could simplify their lives instead of having, I don't know how many doors they got, just call it 50. Mm-hmm. Yeah, 50 doors, where it's like, I'm just going to pay off 25 of them, sell the other 25 off, pay the other 20 off. My life just got simpler. Selling 50 tenants, I got 25 tenants. However they want to move it down to. Okay. So it's like, and then they could diversify it to where it's like, you know what? Real estate is still too active. I don't want this many people. I'm going to sell off the 50 down to 25, get the first 25 paid off. The extra cash, I'm going to start moving into a diversified, or go to a financial planner and say, I need you to put this into a market and diversify it across asset models or different types of asset, but in the financial markets, because that is a passive aspect where it's like, that can just generate cash. And you don't have to maintain it because somebody else is doing it. I mean, over time, we can get into different aspects of that. But I think you could do that to where it's like there's all kinds of different things you could do because they have that's a part of the name, freedom. They have the freedom to choose what they want to do with it. I don't think if they took 10 years off, they come back, then all of a sudden they're going to lose it all.
Yeah.
As like, cause like they still have the skills. They still know how to manage real estate, and they still already own all those 50 doors.
So, okay. So I disagree with you on a lot of those points.
Yes, you do.
Of course. I agree with the overall premise, what you said. Like, and to summarize a lot of that is you have to stay involved with your investment, even though you want that financial life, that financial freedom life, that passive life, you still got to be involved, right? You still have to pay attention. What is the market doing? What is all this? One thing I disagree is that you say you already have the skills, you can come back later. I disagree, right? Because the market changes and evolves so quickly that we are already seeing investors that have been doing this for 30 plus years. The market has changed so much that they don't know how to invest anymore. Their traditional models, they can't find investment properties. They can't find deals. They don't know what the hell to invest in because what they used to do doesn't make sense anymore to do. They need to adapt to the new market.
Because they're generating active income by flipping houses and doing owner
No,
finance
they're
notes
doing
and
buy
things
and
like
holds. They're doing buy and holds.
Because they're using their old models.
Exactly.
Because they want they want to get all their money back out.
Yes.
So that's the same, but that's not their
But
scenario.
they were out of the market for so long that they come back into the market and they think that they can implement that same strategy.
Because they left too early. They didn't have the cash. Toward these people, like
they did at the time.
They could sell other, like, that's what I'm saying. Like, you're talking about finding deals. I was like,
I'm talking about sustaining your financial freedom, right? Like when you trying to sustain your financial freedom, I believe, like I said, I believe there's a point where properties will have more of a diminishing return as far as you saying like, okay, I should leverage these properties. I should do something. It's like, well, is it worth doing that, or is it more worth getting rid of that and moving?
But you're talking about maximizing your return. You're not talking about maintaining your lifestyle.
Well, I don't know what your expenses are going to look like at that point. You know what I mean? Like I'm saying, like maintaining.
You're looking at getting a return on your cash. That's not what they're going after.
No, I'm talking about maintaining that quality of life that you have right now. Like, so you feel like with whatever properties they have right now, with the same properties, they will always be able to maintain their quality of life.
Yeah, for sure. That's what real estate does. That's the whole point of real estate. It's like it grows over time and the equity gets paid down. And then you can manipulate your equity positions and things like that to where like at scale and a knowledge base, and you didn't inherit it, you built it, you know how it works. Like those skills don't go away. Like, yes, you might not be able to find the same type of deals anymore, but if you built your life early, like you're talking about those people that left and tried to come back, it's like, well, why? So they didn't have enough cash to maintain the lifestyle from the beginning. They didn't have things built right from the first point. They had too many notes. So all of a sudden, all their notes got all paid off, and they had all this cash. And it's like, well, shit. Now I have. That's why he's like, you went all in on notes, and
right.
It's like,
so what is the right setup then?
For
like you're saying, they didn't have the right setup, so they had to come back.
Yeah.
What does the right setup look like then?
I was like, I don't think it's having all notes, because then you're gonna have a bunch of and it's having something that can have a defined endpoint that leaves you holding a bunch of cash, and you left for a long time and you tried to go back, the same thing. I think that's a bad idea. Where you owning property, you're always going to own that property until you sell the thing off. To where like when you come back, like you're the owner of it. People always need a place to live. So no matter what the market is doing, unless like a regulation is come in and do this, so that's something you do need to pay attention to. Because if you go hard left, like New York, Wisconsin, or not Wisconsin, New York and Washington and the east and west coasts are doing, it's like now that could be a huge problem towards your portfolio. So you can't put your head in the sand for stuff like that.
Right.
So I think that's where like people like that tried to come back, is they don't understand how this market works. It's like, well, why are you coming back trying to do the same things that you were trying to do 10 years ago, 15 years ago? Like, are the properties you own now, did you over leverage and you took the cash, you mismanaged your portfolios? Like if you own 50 doors, there's no reason that you shouldn't need to buy another house. You could essentially liquidate those and go buy retail if you wanted to and still make them cash flow. Because you could pay 50% of it off. You can still get cash flow. It's like the same thing with them. Like they came back. It's like, I'm going to sell off these older properties and I'm going to go buy a bunch of brand new houses and pay for them all in cash. They're still going to be just fine. They might not be generating the excess amount of cash flow, but that's also why you can't do your financial freedom. Is like, I need 10 grand and I generated 10 grand. So that's it. So I'm financially free. It's like, no, you still got to have a buffer. You still got to have for the contingencies of that, because yes, the cash flow might go down, but you need to make sure that you're not doing the American thing of just like living to all of your income and beyond. Where it's like you need to live below your means, where like cash is still pooling. So you still are getting access to assets to where you have a pool of cash afterwards because they went.
So this is good because the reason I push back is for you to clarify those points, right? So one of my points with all of this is that a lot of people have the misconception, and I'm not saying by any means the people that we're talking about have this concept because they're not like that at all. But they have this conception of real estate being something like, oh, I invest in it, it becomes passive, and I forget it. I don't even have to think about it. I get a property manager, we're good to go. No. Like all the points that you made is why you need to stay involved with it. Yes, you don't need to do the day-to-day grind, all these things that you used to do. You don't need to answer the phone for, a clogged toilet or shit like that. There's so many things that you can do for that. But that doesn't mean that you don't pay attention to your market, that you don't pay attention to your investments, that you don't pay attention to how are your properties actually performing overall. You need to be, how many people have we spoken to that they hadn't increased their rents in years? That you're looking at it, it's like, how the hell are you still surviving with the inflation that we're having and you're not increasing your rents? You understand? Because they're self-managing, they had their properties, and now all of a sudden it's been deteriorating, and they haven't been raising the rents, they haven't been keeping up with it. Now they got to let go of these properties because they did it way too passive.
Yeah.
So it's like,
well,
the
we run
point
into
is
that all the time.
Exactly. So the point is that even passive investing is not 100% passive. You still need to be involved. One point that I definitely disagreed with is you go to a financial planner. I think that's the worst thing you do. You should never go to a financial planner. Most of those people are more broke than you are. You know what I mean? Like, I think if you're going to be investing in the market or anything like that, you gotta be educated.
That can
but you got to be educated.
You do. It's the same thing you do with CPA. You got to have a 30,000 foot view. Like, you can't go to a financial planner and just be like, just invest it. No, you can't.
But what I'm saying is, like, you saying go to a financial planner, you need to specify so the people listening understand that's like, you don't just go to a financial planner. You don't just go to a CPA, a real estate attorney. You need to understand this first.
Yeah.
You need to understand tax law. You need to understand real estate tax law. You need to understand, if you're going to go to a financial planner, what do you want to be invested in? Do you want them to put you in a mutual fund, or do you want to be in index funds? Do you want to be in growth caps? Do you want to be in foreign stocks? If none of those things make sense to you, the financial planner could sell you complete dog shit and you won't know. And then all of a sudden, what you thought was going to be a financial future for you, all of a sudden tanked as soon as something happened. So that is the point of this, is that what does financial freedom look like after you've reached financial freedom? It looks like something that you got to keep maintaining. You got to keep an eye on. You got to keep educating yourself. Yes, you don't have to do the daily grind on it, but you have to know what is the market doing.
I think it's anybody that achieves it themselves is going to naturally have that mindset anyways. That's like, I don't think, I think, I'm going to say there's nobody out there.
You would hope.
There's somebody.
Yeah.
But as somebody, like, if you grinded your way to financial freedom, acquiring assets, working, educating, like, you're not going to be somebody that's just going to be like, I was going 100 miles an hour and then just zeroed out, retired on the beach, and disappeared. And it's one of the things that might actually work just fine for your lifestyle, or it's like,
who knows?
It lasts you 40, 50, 60 years, but I think you're not going to have anything for the kids after that, because what is that thing like? When wealth is created, it's squandered by the third generation.
Yeah.
Usually.
Yeah. No. I agree. I mean, that generational thing, and this is, we're not talking about generations because that goes into parenting and how you parent your kids, of whether that money's going to last or not. But that being said, like, I think that was really the point that I was trying to get to, is get to a point where, like, guys, you might reach financial freedom sooner rather than later because your living expenses were really low, right? Your living expenses were so low that you hit that financial freedom like so quickly. You had a few properties, you hit it well, boom, you're cash flowing, takes care of your expenses, and then some, you're free. Okay, but you're not free, right? Like, you're free as long as you keep an eye on it.
Tony Robbins talked about that in his book, I think, about that book on money. I think it was just called Money, right? Money,
Master the Game.
And but he gave levels of financial freedom to where it's like, he didn't call like financial freedom, like there's a step before, like financial independence. That's where it's like, hey, you were independent from, you didn't need to work, but you still weren't free.
Yeah.
Because like freedom, I think it was when you generated so much in excess that it's like it built for that contingency of things going wrong to where it's like the independent aspect is where your liabilities meet your assets and the cash flow coming off of it. Like, but you're not making any extra money to grow beyond that.
Yeah.
So I think like the financial freedom is when it's like, no, you have so much extra that you're like, to where these people were like, we don't know what to do now. So obviously they reached the financial independence where they crossed over that threshold a while ago. So now they have the position that they're in now where it's like, what's next? What do we want to do? How does
Right.
that work?